Sean Udall of the Tech Stock Strategist here. He's going to comment on some of the stocks that he's been following here and what he does in between the earnings seasons. Sure seems to have a lot of fun analyzing the earnings.
Good morning, Chicago, or good morning, Detroit.
Good morning, Detroit. And how is California? I bet you it's a chilly 62 degrees there.
You know, it's actually chillier. I don't even know quite how cold it is, but the heat's been kicking on pretty good. So I bet it's 45 to 50 degrees outside right now.
All right, we won't take up a lot of your time this morning, but man, we just gotta follow through on some of these stocks here, and we hope you didn't do too much selling in CyberArk here. What do you do? I mean, did you even expect this kind of move in CyberArk?
I didn't, in fact. So I think I told you guys I had CyberArk that I bought in the mid-30s. I kept it. I was thinking about buying some before the earnings report. But I kind of just thought, a few things in the space had heated up too much. FireEye had reported, Qualys had reported. I mean, I figured Cyber would have a very good quarter, but I just didn't know how much. So I wasn't worried about that they would produce a good quarter, have a good beat. I wasn't convinced, though, that the stock would really go up much above, 48 to 50 bucks. So the fact that we're pushing 59, we've almost seen 60, is pretty surprising. So I basically have a trailing stop on the name.
There you
I'll
go.
write it till she bucks me. I'll write it till she bucks me. There's no way in heck I'm going to, I almost said a minor swear word. No way in heck I'm going to sell it here, short it here. But, by the way, speaking of shorting, there is a price. This thing's hot enough where as much as I like this name long term, if I don't know the price it would be right now, but if it got, much more parabolic and started showing signs of reversal, I would short it because I do think above 55, it's pretty frothy. And if it gets much above 60, I think we might be approaching the realm of short-term stupidity as much as I like the name.
So would you do it not on the way up here? You would, well, obviously for your long position, you would get stopped on the, you would let it take you out on the downside but
there you go.
Yeah, but how, like on the short, would you wait for it to go to 60, 30 and then come back down through 60? Or would you start piecing into it if it started to get over 60?
I have to see it, man. I think in most cases, what I would do is I would wait for some kind of reversal, right? So I'd have to see some kind of reversal and feel it. We'd always talk about art and science. I do a lot of science, but there's a lot of art to this stuff too. So, there's a trading feel, especially with these really, really extended plays. So I'd have to kind of feel it. At the same time, if I saw 65 or 67 or 69 or 71, I'd start throwing shorts at it.
Would you do that in a separate account then, that you have the long in? So you would just be...
I would just exit the long and go short and just say, hey, you know what? I've got so much cushion that I can give some of the cushion back to try to short this thing. And, I'd fire some stuff. And then those I would call, do probing shorts. I wouldn't just short it and give it 9 points of room. I might short it and give it $1.50 of room or something like that. But there's going to be a level if this thing keeps going. Well, or, here's the thing, too. I have other names. The more CyberArk goes up, the more attractive FireEye looks. So what I could do is as I leg into a side, this is all theoretical, right? But as I leg into a CyberArk short, let's say above 65, there's nothing that would prevent me from buying more FireEye. Or I could maybe even layer in another security name, maybe a Fortinet, which hasn't moved at all off of a pretty good quarter. So it basically what I could do is set up, a multivariable pair trade. So, instead of just pairing one name against the CyberArk short, maybe I pair 2 or 3 security names against the CyberArk short. And in that case, by the way, even if it kept going nuts, I don't know if I'd care that much because I would just feel that the other names I own would go up as much, if not more. Huh. But generally, I wait. The simple answer and usually the best answer is I want to see some sort of price reversal. I don't need to see volume, by the way. Some guys are big volume guys, but I just want to see some sort of reversal, and then I might short it.
And
Because,
then you have a reference.
hey,
If you
go ahead.
have a reversal, then you have the reference point. If it makes a new high,
There,
comes
that's
down.
exactly right. You
Right.
have a reference point. You have something to trade against. You have a stop level. It just makes the trading plan easier.
And you could do it a couple times. If you lose a buck and a half, a buck and a half, a buck and a half, then you nail it for 10 points, then, you're automatically in the money. So you're employing good risk reward ratios. So FireEye, you don't feel the same way about FireEye that you do about CyberArk here as far as trying to.
No.
Okay.
So FireEye is still on a relative basis is still a very cheap name in the space, right? So even though the stock has made a nice move, I mean we're still talking. I mean, if we would have bought the stock 1 week after the IPO, you'd have paid $38 to $39. It's still only $4 above where it was trading a couple weeks after the IPO. So I mean, in my mind, and some people don't agree with me, I still think FireEye is kind of trading in a ludicrous manner if you compare it to Palo Alto Networks, CyberArk, Qualsys, other names that have acted way, way better. I mean, I'd even argue Imperva, as much as I love that name, and I nailed that from the lows. I mean, it went from 18 to almost 50
Symbol?
off two good earnings reports.
Symbol on that one?
IMPV. So Imperva IMPV went from 18 to almost 50 off two good reports. Their good reports, by the way, have them growing 22, 24, 25%, something like that. FireEye is growing 50%. So, yeah, I still think FireEye is the best name. I still believe I'll make the most money off of it. And, I still think it's got the stock in the space with a lot more upside than pretty much any of the other ones.
Earnings plays today. ADI, Analog Devices. I was watching this thing March yesterday, and I'm like, oh, it probably had good earnings. And then I looked, and the earnings came out today. They really pumped this stock up ahead of it. Still, trading in the pre-market. What are we doing here? We're trading down a little bit. Any take on Analog Devices?
Really good report. In fact, much better report. All the semis have had surprise. I mean, none of the semis surprised me that supply to Apple. I knew they would all crush, like Cirrus Logic, which we talked about, and a couple others. But kind of the non-Apple semis, your analog semis, your white box semis, these guys are just hammering numbers. I might be inclined to take some ADI if it were to pull back and give me an entry. The problem is you called it already, though. This stock is pretty popular. It's had a pretty good run, and they were juicing this. I mean, even like you saw late yesterday, went up almost $2 from midday yesterday to the close. So, I don't like these extended plays. Sometimes these guys got to mark time and they got to rest, and this is not exactly a cheap semi. I mean, if you want to, for example, compare. I mean, you know how I always talk about the Apple discount versus other things. Well, I mean, Apple trades at a huge discount to Analog Devices. It's a far superior name, right? So nothing against Analog Devices, a very good company for a long time. Kudos to everybody that's worked there and made that company a success. But I'm sorry, you're not Apple, but yet you trade at a huge premium to Apple, and that's a huge premium before you bake in net cash. If you bake in net cash, the Apple discount to Analog Devices is ridiculous. So. There's still all these things out there that are kind of crawling around, but the one here, I don't know if you're going to talk about it for TO, CRTO. I'm actually kind of scanning this one right now.
Ooh.
I mean, that was a report from. I mean, I'm looking. It looks like they beat by a huge amount, and that looks like a good clean beat and raise. Stock's up about 6%. I actually think this should be up a lot more than 6%. I'm actually going to buy some of this because I think that this thing could trade around 50. I wouldn't be surprised. Now, I don't know if it gets there today, but that report's good enough that I think 50 is definitely.
You don't care about the gap there?
Up.
You don't care about that gap all the way down 42 and $43? You don't care about that because you'll just buy more if it gets there? It's a big gap.
Yeah, no, I don't really because sometimes you have a gap that just keeps going, right?
Oh yeah,
and this is one where you get valuations on my side, fundamentals are on my side. I probably don't worry about the gap too much. I mean, I'm not kind of one of these guys that believes that all gaps have to be filled, at least not right away. In fact, sometimes you'll have a gap, maybe it'll get filled 2 years later. if you waited for the gap to get filled, you get 200%
you'd
move.
be, yeah, waiting on. All right, I'm going to stump you with one
Yeah,
here. VDSI.
sure. Yeah.
You follow that one?
Well, yeah, I actually kind of wish I would have shorted that yesterday because there's another good example. I think that there was a good quarter again, really good report, really good numbers, but this stock, yeah, it's never been one of my favorites in the group. Again, I don't think they carry near the long-term gravitas of a FireEye or some of these other stocks. Yeah, I'm basically just kicking myself because I wish I would have shorted it yesterday. It was a very, very clean short. It moved huge. It was down, what was it, 4 or 5 points intraday. And then had I been in a short, I would have made money in a short, and then I probably would have seen that it went down way too much, and I probably could have gone long the name. So I'm actually mad at myself because I really could have made 2 trades on it yesterday, and I did do either one.
You short the comment, or you do puts, or how do you try and play them?
But that one's so fast, I think you would have had to do the common because by the time you're getting your puts lined up, I mean, it already moved, 3 or 4 points. So, yeah, I think, theoretically you could have got some puts in there, but yeah, that's one I'd rather, generally when I'm trading fast, meaning, multi-minute, multi-hour, or, 1 to 2 days, I pretty much stick to common.
Okay.
If I'm trying to do a lot of quick trades, I think common's the way to go. I don't think I have been or will ever be an intraday option trader. If you are,
tough.
great. I
It's
don't
tough.
see how you can deal with all the spread and
Okay,
everything.
we got a few minutes left here. Let's just do a rundown here on some of the stocks we've talked about. You had positions here. The Google did exceed. Did you got over the 540 to the 550? Were you able to maximize your profits on Google?
Pretty close. I still have it. I got a call spread. I mean, basically, I'm pretty close to a trail getting executed on a trailer at this point. But as long as it's sitting between 540 and 550, I'm in good shape. And you know how spreads work, right? You get the short side and the long side.
Yep.
So that you want to maximize your decay on the short side. I haven't quite maximized my decay on the short side yet. So, if I can get a little, basically, if I can get a little more short decay, the profit moves up a lot on that spread for me. So that's kind of what I'm waiting for. Yeah, frankly, in this trade, a good example. It was a good trade, not a great trade. I should have done February's instead of March's because the March
More decay.
I'm waiting for the March's. Yeah, I would have just nailed the February trade, but I'm sitting here stuck waiting for the March decay to kick in. It's not really kicking in.
What about Facebook? Can this thing continue to be in this kind of range forever? I mean, we've had earnings. I mean, I'm looking back on January here through mid-January, 74 to 78, trading in the middle here. This is the run done in Facebook.
You know me. I'm like neutral to bearish on Facebook. So, this is one where I don't love it. So I'm not so sure the run can continue. I will say this though. This is my simple view on Facebook, and I think it's actually going to be the right view. If the Nasdaq breaks 5132.55, the all-time high, and puts on some steam, you can't be short Facebook because Facebook is going to have a strong kind of, at least it's going to perform in line with the market, or maybe even have a period of time where it exceeds market performance. So Facebook, I think, is a tough short if you believe that the Nasdaq could get kind of semi-crazy here to the upside. At the same time, if the Nasdaq doesn't break that high and really starts rolling over, Facebook is one of the first names I would look to short against my longs because I have I'm much more bullish on Twitter now. I mean, Twitter, in fact, is sort of my Facebook part 2 trade, except I like Twitter way, way more than I like Facebook at 22. So the bottom line is I think Facebook's an excellent pair short against Twitter, but if the market really does get juiced, I think you're going to see it trade, well into the low to mid 80s.
I like your different scenarios there. And Twitter, I know you nailed that one off. The earnings, still holding on, getting some consolidation here. A couple tops here around 49. You getting a little itchy on the Twitter here, or do you just want it to pull back so you can buy more?
I'm itchy to buy more. Yeah, I mean, pretty much I view this as like kind of how I traded Apple for the last 2 years. Pretty much any notable pullback is a buy. Any rip is a sell. A core position is a core position that I'm going to leave on. I think I could literally own Twitter for 5 years. We'll see. It's hard to own a tech stock for 5 years, frankly. But I have done it a few times, and I could see myself being in Twitter for a long time. I mean, here's the thing. I mean, what's the all-time high? You tell me. Is it $75?
I think it's 75.83, I think, but don't quote me on that.
Okay.
Let me go to
it's going to all-time highs, and it's going to go to the
whatever it
highs,
is.
and it's going to go
74.
Yeah, it's going to all-time highs.
Okay.
It's going to put on another double on the all-time highs, and it might put on another double again.
Did you hear that, Brianna? Did you hear that?
I definitely heard that.
So you heard it here, folks. You heard it first from the
one
and only.
This is a multi-year deal.
I know
right?
multi-year. No, I'm not. I mean, I haven't heard anybody say Twitter's going to 150. I don't care if it goes there in 10 years. I mean, you made the call. I know. I know you're longer term.
$100 billion, basically $100 billion market cap is kind of. I mean, look at what we just saw. I mean, they're valuing Snapchat at $19 billion. Now, I'm sorry, but if Snapchat is worth $19 billion. Twitter's worth $100 a share. If we just saw not too many months ago that WhatsApp got bought for $19 to $22 billion by Facebook. There again, if WhatsApp is worth $22 billion, Twitter's worth $100 billion. It'll all come to pass.
It's math, right?
Those things are true, right?
You're just looking at math, right? You're looking at the math.
Just doing math. And, I mean, looking a lot about what Twitter looks like, what the metrics look like, what the engagement looks like, all that kind of stuff. So, but I mean, 150 seems pretty reasonable. I mean, think about the day Google IPO'd, everybody hated it. They had the single best search engine in the world. They were crushing the competition. You could buy the stock for $124. Now, Google ended up moving a lot faster. I think Twitter could have a growth. In fact, its first year as a public company growth profile, growth profile, is almost identical to Google's, except it's exceeded a little bit because I don't think Google did 4 quarters in a row of 100% year-over-year growth. I know they did 2 or 3. I don't think they did 100% for Q4, and I'm pretty sure they didn't do 97% Q5. So Twitter is actually exceeding what Google produced. In a year and a half to 2 years, Google went from 124 to, I think, 400. So, I mean, here's the thing. Twitter is not an expensive stock on out-year price to sales. Twitter still, even at $48, it still trades at roughly a 40% discount to Facebook, which is exceedingly stupid because Twitter is a superior growth company right now. So it basically should trade at the same, in line with Facebook, if not at a higher valuation. So there you go. So again, if they don't slip, it would help, by the way, for a couple of it. Like if Google had another kind of touchy quarter, if Facebook growth decelerated a little bit, and Twitter kind of kept doing what they're doing, man, the numbers are going to line up just even that much better. But I mean, I don't know how long it's going to be, but I could be in the same for 2 or 3 years, and I could be selling above $100. It would. I mean, I'm not saying that to be flamboyant. I mean, at $60 billion valuation, Twitter's still relatively cheap versus its peers.
Okay, what about Apple here? New all-time high yesterday. Any thoughts on Apple?
Yeah, in fact, I wrote in my note yesterday that I think short term, I'm starting to feel a touch of the froth at Apple. I own it. I love it. I have calls. I have common. But I'm pairing things off. I'm shifting. I'm shifting away. I'm shifting down my call position. I'm every day. I sell a couple of them. Sometimes they roll up and out. But generally, at this point, if I'm selling calls on Apple, which again I've done 2 or 3 days in a row now, I'm not really buying many of them back. So I did do one where I sold some and I bought a few. What did I buy? Let me look. I bought some April 140s. So, and I've been looking at the July 140s, July 150s, things like that, just to give myself some upside exposure. When you make a huge profit on a call, sometimes you want to take a little bit of that money, and basically make a bet. So, maybe you take a third of your gains and you buy another option in case it keeps moving. But I think it kind of needs a little bit of a pause. I think any little correction we get here in the market coming up, you're going to see Apple take a couple point hit. But I don't really see a whole lot of downside, below 120, 125. And I'm not saying I'd be a buyer at 125, but I'd probably be a buyer at 120 pretty aggressively. So here again, a year or two ago, I said this was a $150 stock. It's getting pretty close to it now. There's no reason to think it doesn't go to 150 or 160. If I thought that 2 years ago, there's certainly no reason I'm going to back away from it now. But, that's not that exciting of a game now. I mean, I'd rather have a stock that I'd rather be buying more of things that I think can move 50 to 100% than things that can move 50 to 20%. So I'm not going to be that enthused about buying a whole lot more Apple at 128 because I think it has, 14 points of upside. That doesn't really excite me too much, but I'm certainly going to keep what I have and ride it.
Okay. Final thoughts on the market here.
Feeling a little frothy short term. Again, I think the thing that's going to happen, though, the most important number I can think of is 5132.55. So that's the all-time high in the NASDAQ. I really do think, what's the reaction going to be when we break that? The algo's going to try to rip it hard. They're going to try to hammer the late coming buyers. They're going to try to foment a correction around that point. Or do we break it, breathe a little bit, and just put on an instant 5 to 8% above it? I don't know, but my guess within 6 to 9 weeks of breaking that all-time high is we're probably quite a bit higher, or within a few months of breaking that all-time high, I think we're quite a bit higher. So, I was talking about a 1998 thesis last year, almost 18 months ago now. So by definition, if last year was 1998, this year is sort of 1999 mini version of it. By the way, CyberArk 60.89 right now, just unreal. But yeah, I mean, a lot of things could line up to create a lot of upside this year where people are ill positioned for it. You know what I mean? So it's not that the market really deserves to go higher, but it's going to go where it's going to go. And the problem is, if people are out of position, they're going to magnify the move. And my suspicion heading into this year, and I think it's being proved out, that nobody really believed that the market could really have a good year and go up a whole lot more. Well, if it really starts doing well and starts going up, you have a ton of people who are, these are big money guys that are out of position, and then they have to chase at higher prices to get back into the market. And I kind of think that's kind of the playbook of the scenario I could see taking place in the next couple quarters. Is you just, again, sometimes it's kind of the dumbest thing happens, but sometimes a market goes up, and even if it really shouldn't. And I'm not really making a political call or a Fed call. I don't hate the Fed, but we'll see. I think we could end up having a little bit more surprising upside this year than people think.
Okay, Sean Udall, the tech stock strategist, joining us here at the last second, all the way from California, getting up early. Thanks a lot, Sean, and we will talk to you again real soon.
You bet. Happy trading, guys. See you later.
Thank